Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So yesterday, a little bit of a leg sweep to the bulls who were getting a little complacent, kind of like me last week, where you had this big gap down yesterday, sliced through some momentum areas and put in a new pivot low for us yesterday. So what did we do as active traders? We reduce a little risk and we just try and be a little bit more tactical, but that doesn't mean you can't make money. It just means you have a little less positions on and you wait for the market to prove that it was just a day or so, because sometimes it's more and sometimes it's just a day or so. So today, using tactical methods that we incorporate in our daily strategies, you could have made some nice cash flow without coming in with excessive risk. And at one point, I think the Dow was down 180 points. So biggest two-day loss in whatever you want to call it since 2017. But if you reduced risk yesterday, you were probably able to make some good money today just using the tactics. Let me show you how. Go to the chart of the SPX. Okay, first of all, let's take this is the chart. You go back all the way to the summertime where you had the Brexit. That was one reflex move, the V bottom, and then the rally. Here was the Trump pre-election snapback, and when he got election day, and then we held it, and then here is your ascending channel here to the upside. Okay, this was that small island top that sliced a lot of us up that were sitting in here hoping that the gap holds to go higher. It didn't happen. We came back into the base. So let me show you how this tactic works. The red dog reversal RDR tactic. You see me talk about it on Twitter. I'm going to go over it right now. Okay, first of all, let me do it on the spiders. If you did it with the S&P cash, it was right here. This was 2268. When as low as 22, oh my goodness, 67. One handle before rallying back about 5 or 6, giving you a little tactical trade, and who knows, maybe we even come up a little bit and test this gap here tomorrow. Usually the strategy says keep a third on, or maybe you kept 25% on, but all in all, it was a good calculated day trade. With the spiders, also very, very similar. Why was it similar? Well, first of all, here is a trend from post-election that got triggered right here. Not to go over the whole thing again, but there it is. Yesterday's low, I put it, so you could look back at my tweet from, I think, 4:45 in the morning, saying, I think we were down, I don't know, 4 or 5 handles. I'm like, down 4 or 5 handles. Yesterday's low is 226.41. Let's see how we handle it. Do we hold above it, or do we trade below it, come back above it for a red dog reversal entry after a pullback? So at first, it dripped down there, didn't go through it, and then it went through it, put a low in at 226.32. So what is that? Like, I don't know, 8-9 cents worth of risk, and then rallied back, almost 90 cents. So I did trade it, and I took some home overnight. Not thinking I'm going to have a blockbuster trade, but usually on Fed Day, which is tomorrow, sometimes they push things around, so I could see them maybe pushing 228.20, into the gap, and then we'll see whether or not we get a lower high or we just get back on track. But either way, 8-cent risk, nice trade, there you go. Now let's talk about something else. As a trader, you always have to be prepared what the market's focusing on and obsessing about. And obviously, the bios have been out of play for quite some time. Trump said, we're going to, price fixing and drug pricing and this and that. And then all of a sudden today, he had a lot of the major CEOs from some of the pharmaceutical and pharma companies, and all of a sudden he started talking about less regulation and faster FDA approvals. And then, you put that together with a red dog reversal and a pivot, and all of a sudden, you had a great day trade. Let me show you why. Here's your IBB. IBB, oh my goodness, look at that candle. IBB started below this prior low. This low here was the pivot. You write that down. Went below 268.65. They sold it down. Then all of a sudden, they started showing the CEOs this, and that. It traded above this. Okay, that could have been entry number 1. And then it also traded above this 3-day pivot, which could have been entry number 2. And now look at the close. This is a huge engulfing candle that should lead to some more higher prices. Granted, it was up a lot today, so I'm not sure if we're going to get an overnight move. But all in all, this was a great day trade. Okay, if you look at the 5-minute chart, doesn't matter if, whatever you want to look at the marches, I don't even want to get into that whole stuff. But anyway, here was the 5-minute chart. This is yesterday's low. Open below it. You could have been a buyer right here. Okay, look at that. Right when it crossed, and then you had your first move, then you had another little bull flag move, a second move, and then it actually got really tight, okay, making a nice bull flag. Okay, you could have maybe missed this and said, hey, I'm going to enter versus the morning low, and then see if we get an afternoon move, and look at that afternoon move above the 5-minute your what's it called, your 8-day move, your 8-day moving average, whatever that is on the 5-minute. But anyway, you know, lots of different ways. Strategy 1, and then this could have been even like strategy 2. Take some off, hold some, find your pivot low, come up, buy versus here, add when it clears that, or you could have maybe even added when it cleared here, or you could have added when it cleared the morning high, because all these are little pivot points that you have a rubber match between the bulls and the bears. But either way, great day trade. Okay, let's hope that it leads to a little bit more so we could stay with it. I am long it overnight. All in all, still has a heck of a lot to prove. I guess if something comes out overnight, we could get a little hurt by the overnight, but it is what it is. We'll see if it can work its way back up towards, you know, the 283. This is a start. Okay, that's all you can do as a technician is look for a start, and here you go. So tonight we have Apple. We'll see what happens. I don't have any option position in it. I think they're pricing in a $4.50 move. If you're trading it after hours and you watched this before, you know, I want to get out there and maybe trade it also. The real pivot to get above and stay above if there's a momentum trade after hours is right here. That is 122.44. It closed around 121. So if a $4 move takes you up to here, so above here, if it you know has a great quarter and they don't sandbag guidance, maybe you make $2 above it. It's been very strong. Here's your trend. Just, you know, whenever you have a trend, I like when it's like here coming into earnings because nothing's really priced in. But obviously, can't do what I want to do into it. This is where it's at. So we'll see what happens. It'll also help dictate the trade a little bit tomorrow. All in all, though, if it wants to go, it hasn't really done anything overall in the past year or two. This is the highs from, what is that, 2015, and then this is another area. So this would actually take it to what's being priced in if they meet and they don't sandbag guidance. I'd rather see them meet and, you know, have wishy-washy guidance, so this way we can maybe buy it a little cheaper tomorrow, but we shall see. I don't have anything going into that. As far as other names, you know, Facebook's tomorrow. It too has come a really long way. It's developed a nice upper pivot. Not going to have options into this one. I don't really, you know, I just don't want to take the risk for the premium even at this point. Held pretty much right here. It's pulled in somewhat. So some guys are buying the 130s and selling the 134s and doing a call spread. Those that believe that Facebook's going to beat and guide up. I'm not that sure. I don't have a big conviction level. The one that I did a lot in, which everyone's downgrading. 2 downgrades today in Amazon about the quarter. I don't know. I kind of think that they're going to blow it out. But anyway, we shall see. I'm in some of the options. So far, it's hanging in here. I'd love to see it turn up a little bit. And then all of a sudden, if they blow it out, because a lot of analysts are bringing down expectations, we can get maybe an after-hours trade or just the option strategy works. I'm not in the stock right now. I think people are selling it off indiscriminately because of the weakness in Google, but Google's report wasn't anything special for new highs. Google did a red dog reversal engulfing day at the 861 pivot and has seen a down move since. At this point, hopefully you covered some shorts. Okay, if you got short here, you had downside follow through yesterday. If you stayed short, congratulations. But at this point, I feel like it's, you know, you could get a little bit of a reflex move up, especially if Apple's fair. But all in all, this was all you needed to know after earnings. Okay, they tried to push above the 2-day pivot, wasn't enough. They missed on the number, they beat on the guidance, but you can't have a stock go off to the races after a huge move that it already saw prior to without the stellarness of the report. So in order for Amazon to do it, it's going to need to be blockbuster, which I do think it could be. And I think there might even be a split, but you know what, I'm risking my premium. If it's not, I'll lose it. We've had a very good option earnings season so far. And we've had a lot of nice trades with Amazon starting from here, and then another one with this nice bull flag right here. So I feel like, you know, I'd be upset if all of a sudden you turn around and it's 890, 900. So I might as well risk a little bit to be in it because I don't take stock into earnings. Lastly, you did see some movement down in the banks. Not the greatest thing to see. Goldman Sachs broke below the 50-day moving average. You know, here was your red dog reversal high. Some of you guys actually got short here, made some good money. Here, we actually got long for a reflex move back into resistance. Okay, now it's back here. So tomorrow, we'll see if we have a hawkish or dovish Fed. Maybe we get a red dog reversal tomorrow here with Goldman Sachs. Wouldn't that be nice? You know, where this is your pivot for tomorrow. Tomorrow you have 228.16. Maybe it gets below, comes back above it. It was just as high as 240. You're getting it $12 off or not. But that's about that. So all in all, you know what? It became flat today with using our tactics. There was multiple ways to make money. You could have made it with an RDR in the spiders. You could have done it with the bios, two different ways, the RDR, or when it took out that 3-day pivot, you know, then you had a little bit of strength in BABA, a little bit of movement in Tesla. So there were some things to do. And now at this point, the market's still trying to prove if that little, what do I call it, a stress fracture, or what was it? I thought it's quite something cuter than that. Well, you know, I said the momentum bull got a little stress fracture. And sometimes a little stress fracture in one of the legs, all you need is a little rest, and then it resumes. But if you don't let it rest and you don't, you know, this is a bad metaphor. If you don't let it settle, it could break a leg. And if it breaks the leg, you want to get out of the way when it falls down. Right now, the bull has not fallen down. It's just been slowed down. So when it slows down, we get a little bit more careful, and we'll know more. We'll see what happens with Apple, and then I'll see you at the morning call tomorrow. Have a good night.